In this video, part of the Startup Tax series, we are looking at compliance-focused tax programs. These are the systems and routines that make sure your tax strategy actually works in practice. I am Calverwell, and I help startups and SMEs make sense of tax early, giving them the control and confidence to focus on scaling their business. Tax strategy is not a free pass to avoid paying taxes. It's about clarity. It helps you identify which taxes are reasonable and how best to meet those obligations. To make that strategy work, a startup needs a compliance program for every tax year. By law, a tax year runs from 1 January to 31 December. But companies may align their tax year to their financial year end with approval from the commissioner. Since tax laws change often, sometimes more than once in a year, programs must be updated through a tax health check. This ensures your compliance matches the latest amendments. Different tax heads require different compliance programs. There is no one-size-fits-all. A VAT program will look very different from a payee or income tax program. ZIMRA does provide concessions and credits for SMEs. Startups that register formally can benefit from these in the short to medium term. But each startup must build its own tailored program, one that reflects its sector, size, and growth stage. Every startup must appoint a reliable public officer, not necessarily a tax expert, but someone dependable, because consistent changes to the public officer only increases cost and admin burden. That officer runs the compliance program, and for the program to work, it must be simple, thorough, and written down. For example, a VAT compliance program should cover notifying ZIMRA once you reach the turnover threshold, avoiding input tax claims on non-compliant documents, reconciling VAT returns with income tax returns, apportioning input tax for mixed supplies, timing filing and accurate remittances, and charging VAT on cost recoveries and other employee benefits. What gets measured gets managed. Compliance programs are not the end goal. They are tools for managing taxes in line with strategy. Startups must measure the effectiveness using KPIs such as actual cost versus estimated cost, quality of return filings and penalties avoided, effectiveness of processes compared to time spent on value-added activities. Compliance-focused tax programs turn tax from a distraction into a system. They free your time to focus on growth while keeping penalties, risk, and surprises under control. For emphasis, good tax planning is only as strong as your compliance program. Stay tuned for the next part of the Startup Tax series, where we discuss the critical aspect of tax compliance, measuring the effectiveness of your tax compliance programs.